This session is very interesting. We have a number of very key speakers that we're very much looking forward to. Our keynote speaker, inshallah, is going to be Dr. Saleh Malaikah. He was the chairman of the last session. I think he was introduced, so if you would allow me, I won't take too much time to introduce you again. Just to give you an idea about other speakers, to the far left we have Professor Khairy Turk. He's a professor of economics and international business, Stewart School of Business in Illinois, and the Illinois Institute of Technology in Chicago. Next to him is Mr. Andrew Cunningham, Vice President and Senior Credit Officer of Moody's Investor Service. Next to him is Professor Gillian Rice from Thunderbird, the American Graduate School of International Management. And next to her is Mr. Dr. Essam Mahmoud, an international consultant from Arizona. Last but not least, Mr. Iqbal Khan, Managing Director of Hong Kong Shanghai Bank's Islamic Investment Division, Amana Division. Without further ado, we will proceed. The first keynote speaker, Dr. Saleh Malaikah.
Bismillah ar-Rahman ar-Rahim. My topic to you this morning is on the future of global Islamic banking movement. The Prophet, peace be upon him, said, لو أني أعلم الغيب لاستكثرت من الخير. My translation is that if I knew the future, I would have attained more of the goodness. I'll try to share with you some of my expectations on the development and movement of Islamic banking in the future. This movement is very much affected by how well the Muslims are doing in the world. In other words, the level of prosperity is going to decide the fate of this movement. Of course, this is measured in relation to the other nations. This is one very important factor. But another more important factor in shaping this movement is the regulations pertaining to Islamic banking and finance in the world. The globalization also, which is taking place in the world today, is promoting the openness of Islamic countries. The World Trade Organization is taking a more center stage, and therefore Islamic countries have to open their doors to many economic players. That is also promoting the infrastructure of regulations in these countries. Regulations is going to become the cornerstone in economic development in the Islamic world. But what makes regulations so important in Islamic banking? That prompts another question in my mind, which is, what is the distinction between Islamic finance and banking and the conventional one? The greatest distinction, of course, is based on the precepts of Islamic jurisprudence, that is fiqh al-mu'amalat, which is making the distinction between the two systems. Fortunately, the area of Islamic jurisprudence in economic transactions have been applied recently or modernized to economics, which is shaping this industry of Islamic finance and banking. If you have heard of the accounting and auditing for Islamic financial institutions, abbreviated as IOFI, which is responsible for introducing so far 28 accounting and auditing standards. And this organization have gone a step further 2 years ago by establishing a Shura Council or a Sharia board, a Sharia Council or a Sharia board. The reason this is important is because this Sharia Council is setting a standard which is going to help in uniforming the fatwas so that we're becoming more in agreement on what's Islamic and what's not. IOFI also has taken steps to pursue the central banks in the Islamic countries to adopt its standards, whether it's the accounting and auditing standards or the Sharia standards. But the central banks are not the only regulators in any country. There are capital market regulators, there are other bodies and agencies that deal with the financial markets and the financial instruments. This is going to be quite a challenge in the Islamic countries, and it's going to decide the future of Islamic banking. To understand the future better, we have to look at the experience of different countries. Now, while some countries have shied away from opening its doors to Islamic banking and they're worried about it, some others have taken very serious steps. Some of the countries that have moved forward and continue to do so is Bahrain. Bahrain has not only regulated Islamic banking under its central bank, which is Bahrain Monetary Agency, but has also allowed 20 Islamic banks so far, around 20 Islamic banks so far to operate. Some of them onshore, but the majority offshore. The Bahrain Monetary Agency also have joined the Islamic Development Bank and Labuan Offshore Authority of Malaysia to introduce Islamic notes which are based on sovereign risk. The first note that was launched about a month ago by the Bahrain government, it's guaranteed by the Bahrain Monetary Agency, but in the plan, several countries are going to introduce these notes using the influence of the Islamic Development Bank. The Bahrain government has also encouraged the secondary market movement for Islamic financial notes through its stock market, and it has allowed many financial instruments, Islamic financial instruments, to be listed and traded there. Bahrain also hosts IOFI, the organization I just mentioned, and the Islamic Banks Council, which is a new organization sponsored by IDB. Bahrain has also issued regulations for variable capital companies using the Mudaraba concept. So Bahrain has played the center stage, and it's going to see more growth of Islamic banking in that particular country. Malaysia also has done a good job in regulating Islamic banking. The government is committed to its growth to the extent that it has set targets for its Vision 2020 and the shorter term plans. The government of Malaysia have been issuing Islamic notes, and there is an active secondary market there and several market makers. Malaysia also have set an excellent example of how takaful industry should be, since there is a number of takaful companies, which is the substitute for the conventional insurance. As I mentioned earlier, Labuan, which is Labuan Offshore Financial Authority, has a mandate to promote Islamic banking and finance along with Bahrain. Some other countries like Sudan, for example, which have set a good example in regulating Islamic banking and finance and insurance across the board, they've done a good job in my opinion, but their experience is not showing because it's hampered by their own economic and political scene. There are other countries which are moving toward regulating under the Islamic law, like for example Kuwait has an Amiri Commission to overlook the implementation of Sharia in all of its regulations across the board, including capital markets, banks and insurance. There are other countries, in my opinion, that are watching the trend and they are expected to join soon, but I will not speculate which countries these, but that's going to continue to happen, and when that happens we're going to see more growth in Islamic banking. Two things I should mention here in light of the globalization taking place in the world today. The globalization is inducing all countries to regulate, and therefore allowing laws that promote investment banking, which the Islamic countries are deprived of having laws pertaining to investment banking at large, except maybe for Malaysia. These laws are very necessary for promoting Islamic banking and finance activities. So that is one good move which is going to help Islamic banking. Another factor is that this openness and globalization is seen as an opportunity for Islamic bankers, since there are 1.2 billion Muslims around the world, and some are minorities in the non-Islamic countries. So there is a possibility of taking this Islamic banking model to the other nations. So those who are going to lead that movement are going to reap some rewards. The recent trends that you may have heard of, the consolidation that's taking place in the Islamic banking industry, Dar al-Mal Group, which is Faisal Group, has consolidated two of its subsidiaries and merged with another one. So they ended up with three entities with a much larger institution. Within Al-Barakah also, they have established a bank holding company in Bahrain, which is merging with a Kuwaiti Islamic financial institution. So there is consolidation also taking place, and that is expected to go on. Now, if we look geographically, we will see that the Islamic banking in the Gulf countries is growing at double-digit rates, and I name some of the institutions which are growing aggressively: Al-Rajhi in Saudi Arabia, Kuwait Finance House in Kuwait, and Abu Dhabi Islamic Bank in Abu Dhabi. These are growing at double-digit rates and doing very well. And the main reason they are doing so because they are onshore and they are in prosperous economies. So that takes us back to the original point, which is related to the prosperity. I'll move also to the non-Islamic countries, and I'll talk about the United States, since the United States is setting an example by being a leading economy. And there is a large Muslim minority here. The market here is very well regulated, it's active, so that's fertile ground for Islamic banking to grow, since there is a market. However, there is a question of how large is the market and whether there are economies of scale. I'm sure this is going to be covered more in depth by the other speakers, but in my opinion, I think the United States presents a very good example of how markets should be regulated. And from my own evaluation, there is a possibility to establish many of the Islamic financial concepts here using the current regulation. It's just a matter of understanding the system and adapting to it. Particularly, I would say, in the asset management and in the Islamic home finance. And I think you all heard about some of the recent movements of HSBC, which is Brother Iqbal Khan is going to cover, and some other institutions like MEF and, of course, LARIBA. If that movement continues in the West, especially in the United States, we're going to see more of that in the other Western countries and the other non-Islamic countries, as the Islamic minorities prove that this sector is feasible. For the sake of time, I'd rather stop here, and thank you very much for listening.
Thank you very much. Our next speaker is Professor Khairy Turk. He will share with us the pitfalls of conventional banks and the banking crisis in East Asia, particularly Japan, Korea, and Taiwan.
brothers and sisters. It's so wonderful to be here among friends, Americans and non-Americans, Muslims and non-Muslims. The word friend in Arabic is derived from sidq. Sidq means the truth. So a friend is the one that tells you the truth, even though sometimes the truth could hurt a little bit. My topic today is the banking crisis in Japan and Korea. I didn't have time to cover Taiwan, so I apologize. But when we deal with Japan and Korea, we are dealing with the two strongest economies in Asia. They both are facing great in their financial sector. Japan, for example, has $500 billion of bad loans. We all know about South Korea, foreign debt in 1996, it's about $64 billion. So we need to ask ourselves a very simple question. How come that these two strong nations have ended up with such a bad financial sector? My answer is that the problems of the banking institutions in these two nations started with foreign pressure from the US. I'm not going to say that the American policymakers intentionally try to hurt the banking institutions in these nations or hurt their economies. If anything, that could be far from the truth. But we cannot escape the fact that strong pressure on these two nations have precipitated the banking crisis. And I'm not going to bother you with technical details on how the nations of South Korea and Japan are dealing with the crisis in terms of targeting the interest rate or targeting inflation rate. We'll leave this to the specialists. But for the moment, I'd like to use this crisis as a vehicle to deal with much larger issues. Issues that are of interest of us, especially those who are from third world nations. The largest issues, I think, are, number one, how could development take place in the shadow of stronger superpowers? When we talk about development, we're dealing with essentially a weak nation, dealing with or has to live up with the interests of foreign superpowers. The interests of coincide. Number two, once the pressure was exercised from above, how could the weak party deal with that pressure? Now, development, of course, is not basically an economic process. When a country tries to develop, it has to deal with the political facts of life. And if you happen to be a third country and your interests would coincide with the interests of the superpower, then you are very lucky. You will have a much easier time than if this was not the case. As a matter of fact, if you look at the development of Japan and Korea, you will find that one of the reasons Japan developed very rapidly at the beginning of the 20th century was that the interest of Japan and the interest of England, that time the superpower, coincided, in the sense that England wanted to build up Japan so that it could be a counterpower to Russia. Now, look at South Korea. South Korea developed also quite fast because thanks to communism, it was in the interest of the US to build up the South Korean economy to show that capitalism is a much better system than communism. Okay. So let us talk about the banking crisis in Japan. And also the banking crisis in Korea. Strangely enough, the seeds of the two crises were planted in 1985. 1985 was a watershed year. How? In 1985, the US had huge deficit, trade deficit with Japan. So they decided to force Japan to appreciate its currency and devalue the dollar. As you know that if you devalue a currency, that will make your exports cheaper and your imports more expensive. So the idea was to make Japanese exports more expensive for the American consumers. Now, this is pressure. The value of Japanese currency was $1, was 360 yen per dollar. Now it became 240 and eventually was reduced to 120. How did the Japanese react to this? I'm talking about pressure and counter pressure. The Japanese reacted to this by reducing the costs of their products. So, for example, a car that would cost $4,000, they would make it sell for $2,500. They did this through time and motion, through teamwork, etc., etc. This is not the subject of today's discussion, but this is how they were able to do it. But in the meantime, in order to increase the efficiency of the Japanese industrial sector, because they knew if they don't improve efficiency, their exports would suffer. The government increased the supply of money to make the interest rate quite low, and this would encourage the industrial sector to invest more and more new equipment, etc., etc. Now, the government objective in that respect was fine. I mean, it was achieved, but it had a side effect. The side effect that the society or the economy was awash with liquidity. And this gave rise to speculation. A lot of people started speculating on assets. The value of land went up astronomically, and the banking system kept giving loans using land as collateral, and as the value of land went up, the bankers gave more loans, etc., etc., and things got out of hand. So that's the beginning of the crisis in Japan. Now, in 1985, also after 1985, we see something very interesting. We see the collapse of communism. And before the collapse of communism, oh boy, I'm just warming up, and it's okay. The United States didn't really bother Japan and Korea in terms how their own brand of capitalism should operate. So we have in Japan and Korea the Asian model of development. What did the Asian model of development mean? It meant that you focus on building an industrial sector and you use financial institutions simply as a supporting role. So the main objective of the financial institutions in Japan and Korea were not to maximize profits. No, they were only to help the manufacturing sector. So in that sense, you can see that in both these two East Asian nations, the financial sector was really quite underdeveloped if you compare it with the Anglo-American model. Now, let us talk about the pressure on Korea. The Clinton administration came, and the supporters of the Clinton administration were people from the Wall Street, some of the Wall supporters. So suddenly, the people in Wall Street, as we know from the financial meltdown in 1997 experience, they were interested in allowing short-term capital movement to move across the borders. Short-term capital is very destabilizing because they just go into the country to make a fast buck and leave as quickly as they came in. So I just would like to quote to you something from the New York Times. It said that Clinton's supporters of the banking industry wanted financial liberalization. This liberalization became a centerpiece of his foreign policy. One official said, "We pushed full steam ahead on all areas of liberalization, including financial. I never went on a trip when my brief did not include either advice or congratulations on liberalization." This is the type of pressure Southeast Asian nations, for example, faced. And for Korea, Korea at that time wanted to be a member of the OECD, the Rich Nations Club. So the US said, you want to be a member? You have to open your borders to the movement of short-term capital. So they use a stick and carrot approach. So the thing we could say here that we cannot escape foreign pressure. And in many cases, many developing nations had to succumb. They have no other alternative. But as we can see from the experience of, yes. Oh, I can see very well. Thank you, giving me 20 minutes. Okay. You can see from the experience of South Korea is that it has been able to confront the American pressure. I wish I had more time to spend on how this was done. But I could tell you there is a Chinese saying that the mouth says yes, but the heart says no. Is that right? Okay, that's Egyptian saying. Okay, even though I'm from Egypt, I should have known better. So that's exactly what the Koreans did. When they had pressure from the IMF, they kept saying to the IMF, yes, you are the best. We are going to follow anything that you want. But in the background, they did everything to slow down the process of IMF recommendations. I think Korea's policy was completely the opposite of Malaysia, where we had an outspoken leader. But Malaysia was in a much better position than Korea because Malaysia did not have the high amount of foreign debt that the Koreans had. And Malaysia had our friend here, Brother Noor, which Koreans would never have his like. So that made a lot of difference in what type of policies the two nations had followed. I know I'm coming up against the time, but all I can tell you is that we should not blame the United States for everything. Because if you look at Korea, for example, there was a lot of this lack of transparency among banks. The banking system was inefficient. And the same thing was true in the case of Japan. So the crisis was an opportunity for these nations to get its act together. So we see mergers among banks. We see more transparency. So I think in the future, the financial situation will improve. But it has to improve at the third world nation's pace. You cannot force an overnight change like people at the IMF and Washington would like us to do. Okay, I'll stop here, and if you have any question, I'll be glad to answer it during the question and answer time. Thank you very much.
Thank you very much, Professor Turk. Next up, we have Mr. Andrew Cunningham. He comes to us from the UK. And his topic today will be conventional banks and Islamic banks, risk analysis, the changing nature of bank risk in the 21st century and the specific case of Islamic banks.
Ladies and gentlemen, it's a great honor to be asked to address this conference, and I'm very grateful to LARIBA, American Finance House, and its associates for inviting me to attend. I am a bank analyst with Moody's Investor Service based in London, and so my perspective for you today is that of someone who has spent most of his career analyzing financial institutions in the Middle East, and more recently has shifted his focus to financial institutions in Western Europe. The presentation which I gave to the organizers of the conference is far too long to give to you now. So yesterday I judiciously cut it down to about 15 minutes, and I guess I'm going to have to judiciously cut it down a little bit more to about 10 or so. So I'll see what I can do. And so what I'm going to do is to ad lib a little bit and try to draw out the main themes of my presentation. The banking industry is undergoing steady and profound change throughout the world. The areas in which banks have traditionally made their money are being reduced, eliminated by technology, or taken away from them by new players in the market. And so to compensate, banks are pursuing new areas of growth, such as asset management and insurance. If you look at the balance sheet of a bank today, it looks very different from the balance sheet of a bank 50 years ago or even 25 years ago. And if we look forward, the balance sheets of banks 25 and 50 years from now will be almost unrecognizable in relation to what we today think of as a bank. The purpose of this paper is to describe some of these long-term strategic trends facing the banking industry and to ask how well Islamic banks are placed to deal with those long-term strategic trends. In the past, I have addressed the issue of balance sheet risks for Islamic banks, and within the community, there has been a lot of analysis of, let's say, liquidity risk of Islamic banks, capitalization, asset quality. And what I want to do today is to move away from those balance sheet risks and look at the longer-term strategic risks, because I think one can say that issues such as banking technology and the changing preferences of consumers of banking products are such that these long-term strategic trends are actually of greater threat to banks than those well-rehearsed risks of asset quality and capitalization. In the time available, I'm going to look at three areas: disintermediation, technology, and balance sheet instruments. I know I said I wouldn't deal with balance sheet, but I'm going to just deal with it a little bit. What do we mean by disintermediation? Historically, banks have made their money by taking in deposits on one side and pushing out loans on the other side. The amount that you get on your deposit is less than what you pay if you take a loan, and that's how the bank makes its money. Obviously, I'm talking about riba-based banks here. And that has been a very profitable business, number one. And number two, banks have dominated financial markets. If you wanted to place a deposit, if you wanted to take a loan, where you went for it was a bank. So the banks were A, in the center of the financial system, and B, involved in very profitable business. That is changing. The most obvious example of that is the international bond market, where people who want capital now go directly to people who have capital. They don't go through the banks. But there are various other examples, particularly in retail financial services. When I do my shopping on a Saturday morning in Sainsbury's, it's a supermarket chain in the UK, when I pay for my groceries, the cashier asks me if I'd like some cash back, which I can pay for with my credit card. I'm sure you can do the same here in the US. So I don't need to go to my bank to get cash. And if I want a mortgage, I can get that from my supermarket as well. So you have a lot of new providers coming into the market who are challenging the roles of the banks. Now, you can give a lot of examples of this. The fact is that when you look at a bank's profit and loss statement, the amount of money they make from intermediating funds is going down. That is no longer such a profitable business. And so if, as a bank, that is all you can do, you will go out of business. It's as simple as that. So what you have to do is to move into areas such as asset management and insurance. Let's look at technology. Now, technology is transforming all of our lives, and we've all seen it in the banking industry as well. Let's just try to identify 3 specific areas of how technology is changing banking. Good heavens, only that left. Right. Increased distribution power, ATMs. It's separating manufacturing of products and the distribution of products. I'll give you an example. ING Bank, one of the biggest banks in the world, its strategy for getting into France, where it doesn't have a presence, is to use the internet only. It is not building branches. It reckons it can get to customers only by the internet, this new distribution channel. And also you can use technology to design more complex banking products. When we, as bank analysts at Moody's, look at banks and analyze banks, one of the key things we're looking at now is how sophisticated they are technologically. We didn't do that 10 years ago because it wasn't such an issue. Third issue is new financing techniques. I'm talking about securitization, structured instruments, and using things like subordinated debt. I won't go into the details, but what these financing techniques enable you to do is to get more juice out of your balance sheet. If you've got a limited amount of capital, there's only so much business that you can do unless you can increase the volume through that balance sheet. And what these financing techniques enable you to do is to increase the volume and therefore make more money. So how are Islamic banks placed in these 3 particular areas? Now, disintermediation is clearly a threat for Islamic banks because they take in deposits and they make credit at the other side. It doesn't matter if it's not a riba loan, they're making credit on the other side of that. But Islamic banks are very well aware of the opportunities for asset management. Now, I hesitate to use the word mudaraba after Mahmoud al-Jamal's presentation this morning, but the fact is that Islamic banks are well used to offering investment funds. And in fact, I think one of the most exciting things that's happening in the Islamic finance market at the moment is the spread of investment funds as opposed to pure banking. So it would seem that Islamic banks, while they're at they face the threat of disintermediation on their balance sheet, are already looking at opportunities for fee income from asset management, which is a very positive point. If we look at technology, we've seen that technology is sometimes opposed in its early stages in the Muslim world. If you can see examples of Saudi Arabia, see examples of Saudi Arabia when the telegraph was introduced at the beginning of this century, or perhaps television even in the 1960s, there was some opposition. But the fact is that over time, technology has made its way into the Islamic world pretty much in the same way as in the Western world, with one qualification, which is the use of the internet in some states where the governments are concerned that certain material might come in which they don't want to come in via the internet. I was recently talking to a very large international bank, which has just, a riba bank, which has just come to an agreement with a major internet portal. And it turns out that on this portal, people can have access to pornography. And the international bank said, well, we don't want to be involved with you if people are going to, after they've accessed our loan products, can go and look at some pornography. We don't want to be part of that. So the portal set up a firewall to prevent certain material coming in, and so the bank felt comfortable with that and is able to sell its products on that portal. So it would seem that there are solutions which would enable those with Islamic sensitivities to use the internet appropriately. And on the final issue of new balance sheet instruments, I think this is a very, very interesting area, actually. And it's interesting to see right here that we've seen securitization of Islamic mortgages, which will enable an institution like LARIBA to do more business without having to increase its capital, so it can put more volume through the balance sheet. Other areas, such as the use of subordinated instruments, where you tranche off risk. So you might have a fund, and you're saying, well, this group of investors is taking this amount of risk, and it gets a higher return. This group of investors is taking this much risk, they get a lesser return, and so on. And that's a major feature of Western financial markets, and it's not clear to me whether that is possible to be done yet in Islamic financial markets. It's important because it enables you to get to new sources of investors. So that I leave as an open question, and I know people like Iqbal are trying to address those. A final point which I want to make before I conclude. And I want to just step back from what I've been saying about specific challenges. Islamic banks are not focused on profit maximization. And I don't mean that they don't try to make profits. What I say is a business model for an Islamic bank is that the most fundamental function which it has is to provide Islamic banking services to the Muslim Ummah. Right? If an Islamic bank does not make money, but it operates in adherence with the Sharia, it is still an Islamic bank. If it makes a lot of money and it doesn't operate in adherence with the Sharia, it's not an Islamic bank. So the fundamental point of a business model for an Islamic bank is that it operates in accordance with the Sharia. What's the problem there? Is there a problem there? The only potential problem is if that philosophy makes managers and shareholders think that they can get away with lower levels of efficiency and lower levels of return. Because they say, well, we don't actually need, that's not what the most important thing is for us. The most important thing is the Sharia, so we don't need to be as efficient as the river bank down the road. And that's moral hazard. Now, I would suggest to you that there's no necessary reason why that should be the case. You can look at the examples of mutual societies where that isn't the case. And I would also, if I've understood Muslim thinking correctly, then it should be the case that because under Muslim jurisprudence there is no dislinkage between economic utility and ethics, whereas in Western economic theory there is no necessary connection between what is right and what is economically efficient. In Islam, the two are necessarily linked because it is a holistic system. If that is the case, then the surest way to maximize profits is to follow most piously the Sharia. And so necessarily, that conflict should not arise. The fact that Islamic banks, the business model is not profit maximization, should not be a problem for them. So this has been a rather sketchy overview of my presentation. To sum up, if we look at those three areas, I don't see any particular reason why Islamic banks should not be less efficient, should not be as efficient as conventional banks. Banks whose business continues to be based on taking deposits on one side and lending them out on the other side, though, will go the way of the dinosaurs. They will become extinct, with the exception of a few pockets in obscure corners of the world, where they will live on as anachronisms, a bit like the giant turtles in the Galapagos Islands, which are the nearest remnants that we have of the dinosaur age. So that will happen whether you're a conventional bank or an Islamic bank. Successful banks will be those that can retain customer loyalty and current profitability by distributing new financial products which meet customers' needs for the future. And I see no reason why Islamic banks should not be able to do that.
Thank you very much, Mr. Cunningham. Next, we have a double header. We have a treat. We have a husband and wife team of professionals, Professor Gillian Rice and Dr. Essam Mahmoud. They will discuss with us integrating quality management, creativity, and innovation in Islamic banks.
Okay, thank you very much. Assalamu alaikum, everyone.
Alaikum assalam wa rahmatullah.
Bismillah ar-Rahman ar-Rahim. I would first of all like to thank Dr. Yahia for inviting us, and thank you all for participating and listening to us. And just while they're getting ready, I can, I guess, do my introduction. I think what I'm about to talk about, and I'll just speak for the first few minutes, follows on nicely from Mr. Cunningham's last comment about increasing customer loyalty through new kinds of products. And our presentation deals with integrating quality management, creativity, and innovation in Islamic banks. So what we're going to be doing is presenting a managerial framework that will help executives in banks to do this. So we're really looking towards the future. And we have, I think, also somewhat of an optimistic perspective. Do we have anything here? Yes, there we are. We just need the slideshow, right?
If we can dim the lights, if you promise not to leave.
Okay, you can go to this one.
We're taking head count.
Okay. Okay, in a recent article, actually the last issue of the periodical Strategy and Business, Choi and Valikangas said that total quality management is an important tool, but it cannot create sustainable value unless it's coupled with more innovative and forward-looking strategies. And certainly quality is no longer a competitive differentiator. It's really just the way that you can enter the market. You have to do so much more. And Dr. Saleh Malaikah and Mr. Andrew Cunningham have also talked about the issues of strong competition from conventional banks, the technological changes in online banking, and some of the pressures for globalization. And all of these issues really mean that it's necessary for banks to innovate. And when we talk about Islamic banks innovating, we're not just talking about new products, but we're talking about new products, new processes, and new services, and new ways to be able to build up customer relationships. And the literature shows that there have been many studies demonstrating a positive and direct relationship between innovation and performance. In one US study on commercial banks, the research suggested that both innovation speed and innovation magnitude have beneficial effects on an institution's financial performance. Innovation speed is obviously how fast you bring in new innovations, and innovation magnitude has to do with how many innovations you have within a pool. So it speaks to the breadth of innovation. If we focus on innovation, it means that we're talking about knowledge-based competition. And this implies the development of institution-specific resources and capabilities that are difficult for competitors to imitate. These resources and capabilities can be grounded in the implementation of total quality management approaches. And I'm going to hand the mic over to Essam now so that he can explain our framework.
Thank you. As you can see, that we're looking at the future, and we're trying to really build on all the comments that was presented earlier in the first session as well as in this session. All the points that was raised is really valuable, and therefore we need to build a valuable system, and we're focusing on the management side. If we look at the diagram, and specifically that part which is total quality management, number one, we have to look at the top management. They are very well equipped and aware of the term TQM. They know the aspects of it. They know how to implement it in detail. And if not, they need to really refresh their memory and have a basic knowledge. Why? Because they are they are going to be the behinders, that they are going to support the whole team in the bank. And therefore, we need to make sure that they will be the official endorsement for the success of the total quality and also the value of innovation in banking. So we're going to also rely on the facilitators. Without having quality facilitators all cross-functional area in the bank, we would have so many difficulties to implement the total quality and the base for innovation. And then we will have to really think about measurement, internal as well as external measurement. We also have to establish rewards based on the measurement, where we may have to really attain certain goals, and we have to look at the external in terms of my competitors and some other banks, maybe a commercial bank, regular commercial banks. So therefore, we have to tie both the measurement and the reward system together to ensure that there is a continuous improvement all the time, and we try to tackle many of the concerns. We come into the communication part, which is a vital a base, that without it we cannot really have the proper environment that allow allows the bank to have a better performance strategy. So therefore, the communication could really take a vertical as well as horizontal, vertical between leaders and team members as well as the employees, or between cross-sectional functional area in the bank. If we look at the second part, establishing creative environment. Creative environment is based on knowledge, as we already discussed it, and we have to gain that knowledge based on the Sharia, and therefore we need to have a close interaction between the Sharia advisory board and the employees and the team member in the bank. And we would like to have a genuine interrelationship, not just an advisory board that's sitting there that is not involved with the daily transaction, and also try to provide a strong leadership into the banking industry. They have to live with the daily transaction, they have to live with the people and try to really empower them so they will become very equipped and they will be able to establish the creative environment that allows them to be very sensitive to the market and the intense competition that the Islamic Bank are facing. If we look at the next point, you can see me going like express train because I'm sensitive to the note, and inshallah I won't get the note. So if we look at the innovation speed and the innovation magnitude, like my co-author talk about, that will automatically give me a base for innovation performance. And if we look at the two dimensions, that total quality and the innovation performance, both they will automatically contribute to the customer capital. And what do we mean by the customer capital? Our potential customer, the current one, and the potential customer that they will be referred from the satisfied customers that we are dealing with. And therefore, we have to look at the market share, its improvement, and also we have to listen carefully to the needs of our customers. And we have to really rely also on both, the private banking as well as utilizing the technology like my colleagues mentioned, and utilizing the internet, and there are many good examples. I recommend reading the paper, which has more detail. If we look at the feedback, you can see, from that we have established that particular system. What we really ask some banks to open their arm and allow us to spend time with them and try to really find how we empirically find that the suggested framework will be successful, so we'll find some shortcomings and try to improve them and try to report later on for many of the banking, Islamic banking institutions to benefit from such an opportunity. And especially if we have many examples that we can compare, we can see how this particular model can be well received and very well accepted by many banks, not only just one particular bank. Also, we can invite some of the institutions that they help in bank, like the International Development Bank, that we would like them to also consider establishing a base knowledge, information available about all the differences among the jurists and all the differences among different applications, and try to really have this as a database, and rich database that allows them to process in the future and do much better job. If we look at leadership, it has to be based on consultation, and then Sharia board, as I mentioned, trust-based environment between employees and also between customers and top management, communication, which is very important, and culture adaptation in terms of training. We need to emphasize the training must really be on an ongoing basis, and it should really be established, and try to energize the teams among the different individuals in the bank to take leadership in terms of internal training. And that is better than having some external training at the beginning. You may need a shot at the beginning, but later on you have to build your own infrastructure in establishing a proper team-based environment. Many of the employees, they come from a commercial-based environment with non-experience in terms of Islamic principle. We need to really focus on training them and make sure that they are a good example. They really know what the Sharia says about many of the different issues, and also they are well equipped all the time and being closer to the Sharia board on ongoing basis, and have conferences taking places, and also allow some of the researchers to go to banks and then spend time, economists, people in area of finance and financial analysts, and then management specialists, and have them and the Sharia experts get together and spend 3 months and try to iron many of the problems that facing Islamic Bank. And I think we can invite many of the Islamic institutions to start really thinking about those suggestions that we would like to have. And I thank you. I try to really be as fast as possible.
In the anchor position, we have Mr. Iqbal Khan. He will share with us and enlighten us today with a topic of global developments in Islamic finance.
Bismillah ar-Rahman ar-Rahim. As-salatu was-salam ala ashrafil mursaleen amma ba'd. Mr. Chairman, distinguished guests, colleagues and friends, Assalamu alaikum. It's a great privilege and honor to be here along with my colleagues from HSBC in New York, London and Dubai to participate in this convention. In the next 12 to 15 minutes, I would present to you an outline on the global perspective of Islamic finance. The globality of Islamic finance, we will review very quickly their country framework and the growing reach of Islamic finance. We will then do a product review. And then I will walk you through the increasing reach and richness of Islamic finance. We will review some of the major challenges facing this growth industry. Today is spread across, especially the Middle East, Southeast Asia, and Africa, with more than 2/3 of the Islamic finance industry concentrated in the Middle East, especially in the Gulf. There are today around 150 Islamic financial institutions spread across more than 54 countries. Between them, they manage more than $200 billion. This is clearly a growth industry, growing at 15% per annum. Labuan in Malaysia, Bahrain in the Gulf are the two major financial centers. Brunei is also establishing an international Islamic financial center. The growth of Islamic finance is linked to the growth of middle classes, to the spread of education. Wherever we find large, prosperous middle classes, you find Islamic finance is growing. To look at the Islamic finance and how it has grown in different countries, clearly this is an industry which is at different stages of evolution in different countries. Stage 1, you find countries like Singapore Monetary Agency, Hong Kong Monetary Authority, studying Islamic finance as a concept. Stage 2, you find new licenses being given or Islamic financial institutions being established. In Oman, a new Islamic banking license has just been given. In Syria, I am told there is a possibility of Islamic financial licenses, as is the case in Lebanon. But it is in stage 3 when the industry gets some critical mass. You have Brunei with 3 Islamic financial institutions, Turkey with a number of Islamic finance houses, Qatar with 2 Islamic financial institutions. But it is only when you get to stage 4, where there are the mutual funds, that you find that there is a whole Islamic financial markets. Malaysia clearly leads with its own Islamic debt securities, where the Malaysian ringgit market is a very active market. We hope that this will translate into the dollar sector and through Labuan as well. There is a growing realization amongst regulators, amongst countries, that you need strong banks, strong banking system based on indigenous values to build strong economies. And that is where Islamic finance fits into the picture. Mr. Chairman, at its heart, Islamic finance is a free enterprise movement. Dr. Siddiqui today talked about the importance of the private sector. It is the committed retail sector which went out and committed itself in the early 70s. And it is the retail sector which is today going to the large corporate sectors, pension funds, endowment funds, and encouraging them and urging them to invest their funds Islamically. So in Saudi Arabia, you see Saudi Aramco Pension Fund. In England, you see Prince of Wales Trust investing funds Islamically. You see major universities like Oxford University Harvard University, investing some of their funds Islamically today. So non-banking Islamic financial institutions is the big growth market of the future. How can we build the credibility of Islamic finance in the domestic markets? This is already being done. Kuwait Finance House in Kuwait, Al Rajhi in Saudi Arabia, Dubai Islamic Bank, Abu Dhabi Islamic Bank. They're all building credibility in home markets by following important guidelines. They're supporting the domestic financial industry. They are reaching out to other communities. And Islam is an inclusive religion, as is Islamic finance. We find that some of the Chinese customers who approach Islamic banks in Malaysia, in Islamic banks in Brunei, in Egypt we see Coptic Christians coming to Islamic financial institutions. Islam is, and Islamic finance is, an inclusive movement. Becoming role models for conventional financial institutions is quite important. Opening up new markets, educating the regulators, working with community organizations like ISNA in the United States, MCB in the United Kingdom, seeking the support of industry organizations. Dr. Malaikah talked about the IOFI, the International Association of Islamic Banks, and the Islamic Development Bank. These are all very important institutions. A bit about the Islamic financial instruments. In the 1970s, we had the Murabahas, the trade finance. This is actually a reflection of the macroeconomic conditions in which the Islamic countries were in the 70s. As markets have started opening up in the 80s and the 90s, we have seen new instruments coming out. More sophisticated instruments are coming out. And today we see tradable instruments also coming out from various Islamic institutions. A quick look at the risk-return profile of some of the financing products, with Ijara being the highest risk, and the liquidity programs which are run on a tender basis, commodity Murabahas being the lowest risk and the shortest tenure. Similarly, we can look at the investment and the cash products, current account, the currency funds on the short tenure and the low risk side. And you find the various other products which are being available. I want to particularly talk about private equity, as is being offered by institutions like the First Islamic Investment Bank in Bahrain and the Gulf Finance House. This is an important area for Islamic institutions and clearly something which is going to be of great significance in the years to come. These are some of the products. I'm sorry I'm rushing you around, but I think we have got very tight time constraint and a very aggressive chairman. The embracing e-commerce is very important. The opportunities in the field of B2B and B2C areas is very important. We've got new Islamic financial institutions, what I call the third generation of Islamic financial institutions, like iHilalIslamic.com, Islamic investors, Muslim investors online, offering Islamic products. I've outlined some of the qualities and some of the necessities to make this e-commerce proposition successful. But the most important thing that these third generation Islamic financial institutions should talk to each other so that they can set industry standards which will facilitate Muslim investors globally to approach financial instruments. I wanted to give you a richness profile of the Islamic instruments, what is available now, what we need more of, what will be coming soon, and what are the new frontiers. Much has been talked about what is available now. Clearly, we need much more of infrastructure finance. The IDB member countries need around $400 billion, Mr. Chairman, in the next 4 years. And that is a very, very big challenge. Coming soon, OECD home financings. Many institutions, including our own, are focusing in that area. I want to move on to the challenges, and clearly one of the most fundamental challenge is building the framework for Islamic finance industry. Much has been said why Islamic institutions have not been very innovative, but we have operated in a framework where it was not the most macroeconomically enabling framework. Strong economies need strong banking systems. Creating the infrastructure for Islamic finance in both IDB member markets is very important. It's also important to address the cross-border legality issues. We need global Sharia standards. And again, Dr. Malaikah talked about the IOFI initiative and how they are creating global Sharia standards. increasing the embedded capital of IDB member countries, it's important to highlight that the IDB has done its first closing for an infrastructure fund for $1 billion, which will be managed by Washington-based emerging market partners. This is the first fund of its kind. More of that is needed in the private equity, mezzanine, ijara areas of infrastructure financing. Today, it is the need for Islamically compatible debt which is the limiting factor, not private equity. I would like to highlight the importance of resident and non-resident investor program for IDB member countries. This is important because we need to keep as much of our funds in our home markets, and therefore we also need to promote non-resident Sharia-compatible investor programs which can bring money back to the Muslim countries. Dr. Malaikah talked about consolidation and mergers, both within the industry and with outside partners, and I believe more of that would happen. But fundamental to the success of Islamic finance is building critical mass in the areas I have highlighted. To me, Mr. Chairman, critical mass is the ability to go out and bid for any business of any size in IDB member countries. We'll probably see more joint ventures between Islamic institutions and industry partners, harmonization of best standards and practices. This is clearly happening under the umbrella of IOFI, under the regulators, and benchmarking of the best practices is certainly an issue of good housekeeping. I want to move on to some of the other areas, which is reaching the unreachable, the large Muslim communities in the United States, in UK, and Germany. And I would like to advise you that our bank is committed and inshallah intends to launch a home financing proposition in the state of New York effective September. And you will be hearing more about it in the press. And we are hoping that it will be a comprehensive financing proposition in due course. This is an important area because in United Kingdom as well, we are seeing a great deal of interest both in the Bank of England and in the House of Commons as well. I want to move on very quickly for asset-backed liquidity management, which is a necessity to create secondary markets, an absolute essential item for taking Islamic finance to the next stage of its evolution. Asset origination, again, here what is important is that Islamic institutions should go out and originate transactions in a proactive manner, and with the understanding that good deals are bid deals, and they should work with MNCs and ECAs. I'm also pleased to advise you that the major European export credit agencies today are accepting Sharia-based documentation for exports to IDB member countries. Asset management, again, much has been talked about it. I want to go to authentic presence. How can we ensure that we maintain the Sharia essence of Islamic finance? And that, I believe, can be done through a code of ethics, Sharia allegiance statement, and the commitment to recruit the best, mentoring, which has just been talked about. This is clearly the intangible side of Islamic banking, but it is the most important side. You can replicate the tangibles, but in the end, it is the intangibles which are going to make a difference for the Islamic finance industry. Mainstream relevance of Islamic finance can be achieved by creating the framework, educating the regulators, broadening and deepening the market, and making Islamic finance competitive and convenient. Mr. Chairman, to conclude, Islamic finance has come quite a long way from its very humble beginnings. The reach of Islamic finance is expanding to make it a global industry. The richness of its product offering is making it a more competitive industry. The US markets and investors are becoming increasingly important for this growth industry. There are many fund managers like EMP, Wellington, and many US investors who participate in this growth market. Key challenges in the area of capital markets and liquidity management remain. The industry is, inshallah, poised for growth and evolution. Thank you very much.
Thank you. Thank you very much, Mr. Khan.
Would like to once again welcome you to the conference. I know we are going at a super speed, fast track, but that's the intention of it, so it can be challenged intellectually and we can pique your interest in some of the sessions that you might like, hoping that you can carry on the conversations in whatever piques your interest, inshallah, till next year. Then we can have a better year yet, inshallah. The most important thing is that LARIBA banking is here to stay, and we believe in the turquoise model. The turquoise model is a model where it says the turquoise or the turtle moves very slowly towards a goal. And my definition of success is the progressive realization of a worthy ideal. Now we have a worthy ideal that we hope we will realize part of it in our lifetime, and we hope that we can leave the vision for the next generations to carry on until, inshallah, we will achieve what we set out to do. And that is the example of the Prophet, may God's peace and prayers be upon him. And the other point I want to share with you is his real example of how to tackle problems. He was asked, Sayyida Aisha, his wife, was asked, what were the strategies of Muhammad sallallahu alayhi wa sallam? She said, ما خير رسول الله صلى الله عليه وسلم بين أمرين إلا واختار أيسرهما. Whenever the Prophet sallallahu alayhi wa sallam was given a choice between reaching solutions to a problem, he would start from the easier solution to achieve and progressing to the more difficult one to achieve. We're very, very honored by your presence. I'm very, very delighted that you enjoyed, I hope, your halal Kentucky fried chicken, one of the fringe benefits of LARIBA financing in Southern California. For your information, at least three major Islamic centers in the area feed their brothers and sisters in the month of Ramadan. They feed them iftar. At Masjid Umar ibn Khattab, we have 850 dinners every Friday night at the masjid, halal Kentucky fried chicken. At Masjid An-Nur in Lomita, they have at least 400 dinners, and at Islamic Center of Southern California, at least 700 dinners. So every Friday night, you will see a lot of people. Actually, it's the busiest nights in the masjid during the month of Ramadan. I think it's because of Ramadan, of course, but there is another thing that hits your stomach, and that is the Kentucky fried chicken, which is halal. I welcome you all. I would like to start this session by a recitation from the Holy Quran by Brother Ashraf Karim. Brother Ashraf Karim is the Imam at the Islamic Center of South Bay in the Torrance area, Lomita area. And he comes to us from South Africa, went to Australia. It didn't really attract him that much, so he and his wife and his two beautiful daughters came over here to America, and we're very delighted to have him with us. Brother Karim.
السلام عليكم ورحمة الله وبركاته. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. وأدخل الذين آمنوا وعملوا الصالحات جنات تجري من تحتها الأنهار جنات تجري من تحتها الأنهار خالدين فيها بإذن ربهم تحيتهم فيها سلام. ألم تر كيف ضرب الله مثلا كلمة طيبة كشجرة طيبة أصلها ثابت وفرعها في السماء تؤتي أكلها كل حين بإذن ربها ويضرب الله الأمثال للناس لعلهم يتذكرون. ومثل كلمة خبيثة كشجرة خبيثة اجتثت من فوق الأرض ما لها من قرار. يثبت الله الذين آمنوا بالقول الثابت في الحياة الدنيا وفي الآخرة ويضل الله الظالمين ويفعل الله ما يشاء. صدق الله العظيم.
And the meaning of these Quranic verses is, and those who believe in Almighty God and manifest their belief by doing good deeds, they are promised bliss of paradise on the day of judgment, with rivers flowing thereunder, permanent therein. And Almighty God says, haven't you seen the parable of two examples? One person that says always the good words, that says always the words that he and she makes their bonds. It's exactly as if it's a tree, a good quality tree, with its roots heavily and deeply entrenched in the earth, and its stems and branches are high as the sky. And whenever it produces the fruits, it produces it in the best quality and on a regular basis. And on the other scale, those who always say the bad words and not fulfill their promises and express it in a devious way are the example of those like a wild tree, a shrub that has no roots, that can be uprooted easily and has no fruits to produce. It may look good, but in the final analysis, it has no use. And these are examples that are revealed by Almighty God to mankind, so they can reflect and ponder. Almighty God gives you support, gives you strength by standing by the good word and standing by your deeds and actions and promises in this life and in the hereafter. But those who choose to deviate, they hurt no one but themselves. And Almighty God does what He Almighty wants. God has revealed the truth. I'd like to present to you a most hearty welcome once again to Pasadena for those who have traveled a very long distance, and those brothers and sisters who have honored us by being here this afternoon. And I'd like to start the session by a very distinguished guest of honor, my dear brother Noor Mohamad bin Yakcop. Noor in Arabic means light, and we all know Prophet Muhammad's name, sallallahu alaihi wasallam. And he's the son of Jacob, so he is full of light, and he is hopefully following, and I know he does, the example of Prophet Muhammad sallallahu alaihi wasallam, and he has the wisdom of Prophet Jacob. We're very, very honored to have Brother Noor Mohamad Yakcop with us here this afternoon. Brother Noor is a tremendous thinker. I have been following up what he has done in Malaysia firsthand, after the crisis, during the crisis, and at the conclusion of the crisis. And I can say nothing but his reward on the Day of Judgment will be much more than what you think his reward is these days. He came to us from Kuala Lumpur, Malaysia, arrived last night, and he's leaving, inshallah, tomorrow to go back to fulfill his obligations. He is the personal assistant to Dr. Mahathir Mohamad, the Prime Minister, leader of Malaysia. And like I say, we're very, very honored to have Brother Noor Yakcop with us. He is multilingual. Of the languages he speaks Chinese, because he comes from a state in Malaysia, Penang, of course, that's got lots of Chinese speaking. So he speaks Chinese, he speaks Hindi, he speaks some Arabic, speaks Persian, and he speaks, of course, Malay. Brother Noor Yakcop.
Thank you. Bismillahirrahmanirrahim. Brother Yahia, ladies and gentlemen, Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Thank you, Brother Yahia, for the very kind words. Maybe I'd like to start by saying how I ended up in here. When Brother Yahia sent me the fax inviting me here, I of course had to get the permission of my boss, the Prime Minister. So at the corner of that piece of invitation, I wrote there, "Dear Prime Minister, can you please approve me to come to LA for this conference?" And of course I went to see him and gave him the invitation. Of course he didn't look at what I wrote. He looked at this conference and he saw Dr. Yahia's name and all that. And he looked at me and said, "No," he said, "do you think I should accept this invitation?" Then I realized I was in trouble. So I said, "Sir, this is not for you, this is for me." I said, okay, if you want to go, you can go. So that shows that as far as the Prime Minister of Malaysia is concerned, all Dr. Yahia has to do is to ask and he will come. But he didn't ask the Prime Minister this time, he asked me. So thank you, Brother Yahia, for asking me and not the Prime Minister. So in the next few minutes, I'd just like to briefly touch on a topic which is very close to the Prime Minister's heart, which is the poverty among the nations, particularly among the Ummah. As we know, half the human population live on less than $2 per day. In fact, half of sub-Saharan Africa, 600 million people, live on less than US 65 cents a day. And in the case of the Muslim Ummah, out of the 1.3 million Muslims, 70% live in the lowest income countries, virtual poverty. 70% of Muslims live in virtual poverty. And in the case of the rich countries, there are only 4 countries that can be considered rich. in terms of the definition of a per capita nominal income of 9,266 per head. And only half of 1%, not even 1%, half of 1% of the Muslim Ummah live in these 4 rich countries. So, ladies and gentlemen, poverty is a very basic hindrance, a very basic handicap for the Ummah. And our view basically, and the view of the Prime Minister is, and he's pushing it at every conference, at every opportunity that he can, is that to get the 64 very, very poor countries out of this trap of poverty, out of this cycle, vicious cycle of poverty, the basic ingredient is infrastructure, which I think makes sense, because without infrastructure, no matter what we do, no matter what we do in terms of training, in terms of debt relief, in terms of food charity, they cannot get out of poverty, except if you have the infrastructure. So the view is that this infrastructure must be built, and it must be built by way of assistance from the rich countries, possible by way of tax. And this infrastructure must be built directly by a UN agency in the country concerned, and it should not go to the normal bureaucracy of the countries involved. Otherwise, the elite of the country may siphon out the funds elsewhere. The question arises, of course, why should the rich pay? Why should the rich countries pay for this project? We have the view that it's logical and right for those who make a good living in a country through business, for example, to pay tax on their income. For example, in Malaysia, the rich pay tax on a sliding scale, and infrastructure is built, and the rich use the infrastructure. The poor also are able to use the infrastructure. So what happens in a country should also happen in a community or nations where we have poor countries and rich countries. It is only logical for the rich countries to pay for the benefit of these poor countries. In any case, by building the infrastructure in the poor countries, our view is that the rich countries will also benefit. The building of infrastructure projects in the poor countries will provide a direct benefit to many of the rich countries, since only they are capable of providing technology, the sophisticated machinery, and the engineering skills required for big infrastructure projects. In some of the rich countries, the boom in infrastructure building is already over. The infrastructure development phase has matured. However, on the basis of this proposal that the rich countries are taxed and the money is used to build infrastructure in the poor countries, the rich countries will be able to facilitate the longevity of their own engineering and infrastructure companies by sending them abroad. Even the rich countries where construction continues to be an important domestic activity will benefit. This is because, given that the construction sector is cyclical in nature and with painful downturns, the existence of opportunities for infrastructure development in poor countries would help to smoothen the cycle, since excess capacity can be sent abroad while the domestic construction industry awaits the next upcycle in the domestic demand. A very poor country would surely be a poor market for the products of the rich countries. By contributing to the building of infrastructure in the poor countries, the rich nations will be securing potential new markets for their products. Infrastructure by itself builds up new demand for new goods. Better electricity, for example, creates demand for more television sets, washing machines, and fridges. New roads creates demand for more cars, for motorbikes. A cellular phone network will create an immediate demand for cellular phones. These goods will be supplied by the rich countries. The rich countries, by agreeing to this proposal, namely to finance infrastructure in the poor countries, will be contributing directly to the efforts to eliminate poverty in the world and thereby remove a substantial burden on the world community. As we all know, nature abhors a vacuum. The widening of the wealth gap between countries is bound to create friction and tension. By distributing some of its wealth, the rich world will assist in releasing some steam from the pressure of the wealth imbalance. Ladies and gentlemen, poverty breeds illness and plagues. This may rapidly spread to the rich countries themselves. Improving the standards of living of the poor nation improves the health levels of rich nations too, since it reduces the chances of epidemics that can spread worldwide. But why infrastructure? Infrastructure is a basic requirement for any economy, and it provides the fastest gains. No trade or manufacturing activities can be carried out without first addressing the infrastructure issue. Once infrastructure is in place, all sorts of economic activities can be spurred on. Wherever a road or rail track is built, towns spring up. Local producers will not only find a market in the new towns, but will be able to market their produce in faraway places, including in foreign countries. Infrastructure by itself is a social good and benefits a very broad range of the population of any country. Many poor nations cannot afford infrastructure costs which are high and lumpy, although they may be able to support the normal maintenance budget. Given that the poor nations need the infrastructure to get out of poverty, but at the same time cannot afford the infrastructure project, this proposal to finance infrastructure by the rich countries makes a great deal of sense. When we speak of poor countries, we refer to the 64 countries in the lowest income category with a nominal GDP per capita of US dollars 755 or less. These are the countries where we want to concentrate. Now, how is the tax to be collected? The proposal, in the PM's proposal, the tax will be collected from the rich countries for a period of 20 years only. Because to ask anybody to pay in perpetuity, nobody will want to pay. So it's limited by time. And instead of creating a new infrastructure to administer it, which will create more cost, the suggestion is that UNDP, which is an institution under UN, will administer the scheme. Basically, the projects that should be chosen for this project, the multiplier and linkage effects must be maximized. And we are talking about hard infrastructure. The idea is to build the hard infrastructure, the roads, the railways, the bridges, the dams, the pipelines, the power plants. Because some people may say that what about the soft infrastructure, education and others? For them, I think it's quite easy to get the funding from other sources. The funds will be disbursed on a progress payment basis and will be disbursed direct to the project. It's very important that in this proposal to build infrastructure projects in the poor countries, there is no consideration for ideological factors. In other words, we should not relate this to human rights abuses, etc. We just take the 64 countries and build them some of these infrastructure projects so that at least they will move up to a level which is close to a takeoff level. So to summarize, ladies and gentlemen, the view is that the most important factor for the 64 very poor countries to get out of poverty, to get out of this cycle of poverty, this vicious cycle of poverty, is basically the requirement for infrastructure. And it is a responsibility, moral responsibility of the rich nations to help them to build this infrastructure. Thank you very much.
Thank you very much, Noor Yaqub. Before we start the panel, I would like to digress a little bit. We have two very, very distinguished guests, and they will just say hello to you for 5 minutes. The first one is my dear brother, teacher, and example, Professor Sabahattin Zaim. Sabahattin is the morning of the faith, and Zaim means the leader. And indeed, he is in his field. He's an expert in labor negotiations, a professor at the university. May God give him long, long life. He's 76 years old. He is actually, looks to me, about 56 years old. And we're very, very delighted to have Professor Zaim. Please come, Professor Zaim, and say hello to the brothers and sisters. He is also a winner of the LARIBA Award, and we're very delighted and honored. We didn't know that he was coming, and he surprised us all. He's also the Sharia advisor of Family Finance, our operation in Istanbul, Turkey. When he came last time, I called him Sabahattin Zaim Pasha. Right? Remember Sabahattin? Sabahattin Zaim Pasha?
Yes.
Yeah.
Therefore, I will start before my speech with that point. In our old Ottoman tradition, if a person has an intellectual capacity and good faith and character, he used to be called as Effendi. If he has inherited some noble character from his family, he used to be called as Bey. If he acquires both sides, he was called Bey Effendi. So, Yahya Abdurrahman Bey Effendi. Bismillahirrahmanirrahim. Elhamdülillahi Rabbil alemin. Esselatu ve selamu ala seyyidina Muhammedin ve ala alihi ve sahbihi ecmain. Dear brothers and sisters, I would like to thank at first Mr. Chairman as he provided me a few minutes to speak to you. Therefore, to be short and strict myself, I will read it. I am very pleased to be in a conference with such distinguished guests. I would like to express my gratitude to Dr. Yahya Abdurrahman Bey Effendi, whom I know since the time of our mutual trip to Central Asian countries, including Kazakhstan, some years ago. I would like to congratulate the Islamic community of Los Angeles, and particularly American finance house LARIBA Group, for their successful historical achievements since 1987. I would like also to congratulate the clients, customers, shareholders, investors, and managers of American Finance House and LARIBA system for their achievements. I am also proud, as he mentioned, and delighted to have the honor to receive their 96th annual award. Today, there are about more than 150 LARIBA groups in more than 44 countries. Some famous banks like Chase Manhattan, Citibank, Dresdner Kleinwort, Benson Limited, ABN AMRO, and HSBC have already started their LARIBA financial activities. Now, for the future, I would like to bring your attention to the idea of late Dr. Ahmed Naggar, rahmatullah alayhi. This is to focus on community redevelopment by stimulating the saving capacity of small savers and investing their savings to finance small and medium-sized business so that the development process should start of the grassroots of society, and to help in developing tools and systems for attracting deposits and for project identification, promotion, and financing for the economic development of the community. I am happy to see that by the initiation of Dr. Yahya Abdurrahman Bey Effendi, American finance house LARIBA Group is trying to follow this path. I hope and wish that with their efforts and blessing of Allah, LARIBA Financial House of America will become a viable LARIBA financial organization throughout the world. I congratulate all of you again as a pioneer of such a movement. May Allah bless you. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Also have with us a very distinguished guest, one who has worked very hard over the last 25 years on Islamic banking in Pakistan, the Honorable Sayyid Mohamad Hussain, who is the managing partner of Deloitte Touche, and he's also the head of the Islamicization process of the Pakistani financial institutions. Mr. Hussain, please come and say a few words. 5 minutes, inshallah. Again, he just came in today and he told me, and I said, I think it's a good idea to let you meet him for 5 minutes. So we're very honored to have him with us.
Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. As-salatu was-salamu ala Seyyed al-Mursaleen wa ala alihi wa sahbihi ajmain. Brother Yahia Abdul Rahman, I am indeed grateful and honored to have the opportunity to speak to this august audience. Very briefly, I have been in North America for approximately 3 or 4 weeks, came here for ISNA conference, and it's very heartening to see the developments that are taking place in the area of Islamic finance and banking. It is a process, and the process has 2 things which is important. A convergence with the present day's need and demand, that means what the market needs, what the demands are, and also to provide the answers for today's need. And I'm glad to see that Muslims in North America are very much alive to it. There are solutions that are being developed, and I'm sure that we will keep on developing and growing with time. Very briefly, in Pakistan also, there are certain developments which are taking place. You are aware of the Supreme Court's decision of December 99 and the latest extension by the court. Just taking 1 minute, it is a process, and in that process, what is important is the participation of Muslims of various fields of thought. There is still, although there is no doubt there is a ijma that the present day bank interest is riba, that is prohibited, but still there is a large body of Muslims who still question that is healthy, and that is what is happening in Pakistan. That is why you see the process going through this stage where it will appear to you that the process is stalled, but it has not stalled. It's a process that is taking place, and inshallah you will hear more about it. With the shortage of time, that's all I can say to you, and my greetings to all of you. Assalamu alaikum wa rahmatullahi wa barakatuh.
I'd like to start our session by Brother Pervez Seyyed. I was told last night by my dear Nasiruddin Khan, if you are sitting between 2 Pervezes, say Alhamdulillah. So we have Pervez Seyyed from iHilal. iHilal is the latest entrance in the internet financial services activity on the internet, and they are actually registered with NASD, and they can do a lot of activities, online trading of Islamic stocks, and at the same time they are stationed in Dubai. They got operations in New York and in Dubai, and we will be hearing more about it. You got 15 minutes, inshallah. Thank you.
Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, Assalamu alaikum. You know, when Mr. Yakcop was recalling his incidents of how he came here and when he went to his boss, I was recalling my situation. I had a similar situation, but it ended quite differently. When I got the invitation, I went to my boss, my wife, and I told her, well, this is the invitation. And she says, well, can I go? I said, no. It's the invitation is for me, not for you. She said, doesn't matter. I'm coming along and so are the kids. Okay, Islamic banking. Well, there are many ways of looking at Islamic banking. To my mind, one of the most important is the customer perspective. To get an in-depth understanding of all aspects of customer perspective, iHilal.com conducted a qualitative research in the US in the April of this year. This research was conducted in 4 cities, Chicago, Houston, New York, and LA. It was based on in-depth interviews. This presentation is aimed at giving you some sense of the findings of this research. Customer perspective can be seen in terms of different aspects of customer experience. The customer's need for Islamic banking, the primary motives that drive these needs, the level of knowledge and the customer has about Islamic banking, what is the customer's comfort level with the modern day technologies like internet when it comes to financial transactions, what attracts the customer towards Islamic banking, and what may keep him away. First, the need. There is a strong need for riba-free banking and investment products that are in line with the tenets of Islam. The customer has been exposed to some form of Islamic investment and has confidence in the success of this system. However, to understand this need, one should look at the context of this need, that is the core financial culture. The financial culture prevailing in the US is almost diametrically opposite to what the Muslims have in their country of origin, be it Arab, India, Pakistani or Irani origin. As such, most Muslims have to go through a paradigm shift when they try to assimilate with the financial culture in US. Most customers have had to readjust their financial values and mode of operation and come to terms with the different financial reality and concept of product ownership. The Muslims in US bifurcate their financial needs into financing and investment needs. With this bifurcation is initiated a horde of financial needs, most of them in stark contrast to the needs faced in their country of origin. The key prioritized need of most of the middle and upper middle professional and businessmen in Chicago, Houston, New York, and LA are those of mortgage, car financing, credit cards, and investment of surplus income. The core financing needs that most of the target customer cannot do without is the need for house mortgage. It is needed for the sense of security, ease, convenience, and also because the rental proposition and the mortgage cost comes almost to the same. Car financing is the next important need. Insurance is a separate category altogether and is not given the same space in the financial need repertoire. Credit cards again are a strong need simply because of the plastic culture that has replaced cash. Although revolving of credit or stretching the buying power is not the motive behind the credit card use. For monetary gains in the pervasive financial cultural needs, most of the target segments, specifically the more financially sound customers, prefer to invest in options with a degree of risk attached to them. The thrust is in the direction of investment instead of deposits and the rate of return. Thus, the most prevalent and desirable tools for investments are stocks and mutual funds. So, if this is the needs, what are the underlying motives behind these needs? The customer's moral and religious values in general are clearly depicted through their moral and religious values in financial matters and food consumption. Within this broad need base, there are segments of customers with more or less overt need for safeguarding and following their religious values. Secondly, confronted with the non-Islamic culture of US, the customers have an innate desire to protect their religious values, and therefore there is a conscious attempt to abide by the religious beliefs. In food consumption, the religious and cultural demands are resolved to a greater level without leading to a cognitive dissonance. In the financial side, the resolution is difficult and the conflict is of greater depth. With this background, let us see what is the customer knowledge and awareness. Most of the customers are sharply aware of the investment options available to them and depict a great deal of acumen in assessment of financial implications of the different options. There are stocks, there are CDs. They give you good profit from 6 to 7%, and you have an option to get the money out. If you combine all your accounts, then you get very good return, interest. This is a statement of a Pakistani from LA. The customers have the financial sophistication and maturity to discern a genuine proposition when it comes their way. Thus, there is a clear awareness of the most conservative to a highly aggressive financial instruments and the value attached to each. The most used financial tools are money market funds, stocks, mutual funds, CDs, and checking accounts. If I am advising someone, then I will probably tell them to invest in stocks since they are down and the prices are low. The best and the safest are CDs. There is a fixed rate of return and the terms and conditions are also defined. A statement of Iranian from New York. So basically the customer is sophisticated and fully aware. Now, what is the role of modern technology in investment behavior of the customers? The investment behavior of the customer has been greatly directed and boosted by the operational changes that have taken place in the US market. There has been an existing trend to conduct banking and investment through telephone with resultant deconditioning of the customers to seek the human touch. The final culmination of the conditioning was brought about by the growing popularity of the internet culture. The familiarity with internet and its increasing usage for financial transactions brought the option of investment of stocks and shares into most American homes, including its Muslim population. The online trading has given a new dimension to the investment for financially layperson. Internet has become deeply ingrained as a means of communication and financial transaction amongst the customers. It is construed to be the quickest means of gaining access to information and a very viable tool for making transactions. A number of customers have had a thorough exposure of internet and a clear majority, with a slight skew towards the professionals, had experience of financial transactions through internet. I do online banking and other financial transactions. The risks are there as much in telephone and use of cordless phones and no more. Reputable company is an important consideration in online trading, a statement of a Pakistani from Houston. Most customers keep their banking transactions limited with the internet because of the security issue. However, when it comes to online trading, there is no negative word of mouth or experience of hacking, and therefore its use is spreading because security is not an issue. I do not feel comfortable doing all kinds of transactions on the internet. It can be hacked. It is all right to do trading through internet. The fee is low and there is security in it. This is quite well established. The stock trading on internet are handled by large companies, so they are secure. A statement of a Pakistani from New York. When trading on unfamiliar ground, customers have a tendency to access the kind of compromises that are involved and the financial gains or loss with each compromise. In the case of internet, most customers assess the benefits far exceed the risks, financial and emotional. Online trading is construed to be the quickest means of finalizing a share deal that may be lost when done in traditional mode. Then again, online trading offers a sense of freedom and independence that is not there in dealing with the brokerage company or in physical dealing. There is also a financial gain in terms of brokerage fee. Emotionally, the customer can find a sense of security in following a pace they set up for themselves and the timing of the readiness. Now let me go quickly through the barriers. First, the triggers and the barriers for Islamic banking. First, the trigger is the Islamic nature of the product. The customer needs to be sure that the product being offered is truly Islamic. The security in terms of security of the institution, in terms of the security and the transparency of the processes, and then the financial strength of the institution, interestingly as gauged by the amount of advertising that the institution undertakes. The barriers basically are lack of Islamic credential of the product, unclear product proposition or processes, and financially weak institution offering the product. Let me just now go to the conclusions. There is a strong need for Islamic banking and financial services that are in line with the tenets of Islam. Given this situation, Islamic financial products and services will not take long to find their feet in the US. The customer is sophisticated, knowledgeable, and discerning. As such, not easy to satisfy and would demand a level of service that he is used to in general. The customer is well versed to and used to modern tools for financial transactions, particularly the internet. He is comfortable with this mode, and if the basic security issue is not perceived to be there, internet can be the preferred mode. Online stock trading through internet is a mode of investment gaining popularity and offers a good solution to Muslims provided the service is focused on halal transactions only. Security is seen both in terms of operational and religious. The systems have to be secure, processes transparent. The product offering has to be halal and adequately endorsed by the scholars and relevant organizations. Last but not the least, Islamic banking products need to be aggressively marketed because customers like to deal with familiar brands, and peculiar to Islamic banking, they see aggressive advertising as a sign of security of the institution. Thank you very much. These were just basically the main findings, just to give you a sense of it all. If anybody wants any more details, they are most welcome to ask.